Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. It's the first official reaction on skyrocketing inflation rates. Finance Minister says the tolerance band has been breached, but not too badly, adds that the government is trying to relieve pressure on the common man. Markets snap 5-day losing streak. Nifty ends above 17,100. Sensex up 574 points. Autos, IT stocks surge the most. Reliance Industries surges to a near all-time high on expectations of strong Q4 numbers. Analysts turned bullish after Reliance Brands bought a majority stake in Adani Sandeep Khosla, a 35-year-old couture house. Adani Group to invest 10,000 crore rupees in West Bengal in the next 10 years. Focus on ports, data centers, undersea cables, warehousing and logistic parks. Elon Musk opens another battlefront, this time with Netflix, blames its woke content for the first ever loss of subscribers in 10 years. In her first reaction to the spiraling inflation figures, both consumer and wholesale, Finance Minister Nirmala Sitharaman has said that the government is taking all steps to relieve the pressure on the common man. Speaking at an event organized by the Atlantic Council in Washington, D.C., the Finance Minister said while inflation has breached the 6% tolerance band, the breach was not too bad. She added the government is trying to relieve the price burden and heavy investments in the infrastructure will go a long way in growing the economy.
In a way, these are the reasons I would think that India was able to face the challenge of the pandemic and come out. There are global challenges even today, whether it's the crude price, whether it is the prices of all the commodities which have gone skyrocketing. These will have an impact on all economies. But even with this said, India's inflation today is at about 6.9 last month. Our tolerance band is only 4% plus or minus 2% to it. So we could go up to 6. We've breached the 6, but we've not really breached it so badly. Of course, the price burden is on the common man. We are trying to relieve him of that stress. But notwithstanding the challenges, we are now able to stand up and move forward with a lot more system and process reforms.
Inflation in Germany, meanwhile, has broken all records. The Producers' Price Index, or PPI, one of the gauges of inflation in Germany, rose by a whopping 31% in March. That's the highest since the index was started after World War II. The energy index, an important constituent of the PPI, rose by an astonishing 84% on year. Germany is highly dependent on Russian crude oil and natural gas, and the war in Ukraine has hit supplies. This comes even as March inflation hit a 40-year high in the US and 30-year high in the United Kingdom. Markets were able to get out of the clutches of the bears, snapping a 5-day losing streak. Sensex soaring 574 points to top 57,000. Nifty rebounding and reclaiming 17,000. The star of the day was Reliance Industries that inched closer to its 52-week high. The stock has gained over 7% in 2 days. HDFC Twins snapped their 9-day losing streak. Infi also recovered, gaining about 2%. BPCL, Tata Motors, Shree Cement, Eicher and Maruti, some of the top blue chip gainers in trade today and making up the gainers list on your screen. Meanwhile, L&T, JSW Steel, some of the top laggards that we saw in today's session. Big boy Reliance was the showstopper in today's trade. On expectations of strong Q4 numbers, brokerages have also turned bullish on the stock. In addition, the company has been on a shopping spree for the past year, acquiring 9 fashion brands, with the latest addition being couture label Adani Sandeep Khosla. Sakshi Batra is joining us on this. Sakshi, tell us more about the reasons behind Reliance's recent up move and also take us through the blitzkrieg in the world of luxury retail.
Absolutely, Abha, you're right. Reliance Industries moving 7% up in the last two odd trading sessions. What's pushing the stock price higher? Well, one, Morgan Stanley has included Reliance Industries into its Asia-focused list. And second of all, there's a big expectation that this time around in Q4, Reliance Industries will be getting some good earnings, and that will be backed by Reliance Petchem on the back of higher gross refining margins, on the back of the kind of move that we've seen on the crude oil prices. And of course, the big news that we are all talking about, the buying of 51% majority stake in Adani Sandeep Khosla brand as well. So that's going to be a big one. Like you pointed out, it's going to be the 9th brand acquisition by Reliance Brands, which is a subsidiary of Reliance Retail, into its portfolio. And look at the kind of already luxury brands, the homegrown luxury brands that it has got under its wings, and the kind of massive move that we've seen over there, and the kind of inroads it is making into the luxury space as well. 9th brand acquired by Reliance Industries. And this will not only help Reliance Industries get strengthened its luxury portfolio, but also will also help the Adani Sandeep Khosla Couture brand to expand its presence globally as well. Let's move on to see what are the kind of brands that we already are seeing under the Reliance Brands portfolio. You have Manish Malhotra, where Reliance Industries picked up a 40% stake last year. We also have Ritu Kumar's label, Ritika Private Limited, where it picked up a 52% stake. There was a joint venture designer with designer Rahul Mishra as well. Another JV also right there coming through with Anamika Khanna. So a whole host of homegrown brands right there. It also acquired lingerie brand Zivame and Clovia as well. And not just the homegrown labels. Look at the kind of global partnerships Reliance Industries really has with the likes of international luxury brands like Bottega Veneta. You talk about Burberry, Furla, Tiffany. You have all these names under its portfolio. Canali right there as well. Jimmy Choo as well. So it has a whole host of brand partnerships with these global international brands as well. And looks like India's conglomerates, the big conglomerates, are going big on fashion. Look at the kind of comparison you have with Aditya Birla and Reliance Industries. Adani now and Ritu Kumar, Manish Malhotra and Rahul Mishra for Reliance Industries, but you have a whole host of others including Tarun Tehliani, Sabyasachi for Aditya Birla as well. Now let's move on to see what will this really do for Reliance Industries as a brand and for Reliance Brands as well. I would say there are two big questions: whether Reliance Industries will move to make luxury more affordable for Indians, or whether this will help the homegrown luxury brands expand their presence beyond India now.
Absolutely, Sakshi. It'll be interesting to see how that strategy emerges. Sakshi, thanks so much for joining us. Now, do you have a Netflix account? Well, there could be some big changes in store for you. The company is considering major moves to add to its revenues after a very disappointing Jan to March quarter. Meanwhile, the streaming giant has also attracted some very unwanted attention from none other than Elon Musk.
The past 2 years have been good for Netflix. People locked in their homes turned to streaming platforms for entertainment. While in 2020, the streaming service added a record 36 million subscribers, last year, the figure was still a healthy 18 million. This year, in the first 3 months, Netflix has lost 200,000 subscribers. It's the first time its numbers are down in any quarter. The revenues for the quarter were also below estimate. The impact was immediate. Netflix stock plunged by a fourth of its value, wiping around $50 billion of its investor wealth. Netflix is now eyeing those who are not paying for its services by sharing passwords. The company currently has 222 million subscribers and believes that 100 million households are sharing passwords.
We're working on how to monetize sharing. We've been thinking about that for a couple of years, but when we were growing fast, it wasn't the high priority to work on. And now we're working super hard on it. And remember, these are over 100 million households that already are choosing to view Netflix. They love the service. We just got to get paid, at some degree for them.
India has emerged as one of the bright spots for Netflix with its recently launched bottom-of-the-pyramid plans, helping it gain traction in the country. The company is, however, planning to further monetize these low-end slabs by introducing advertisements.
Those who have followed Netflix know that I've been of advertising. and a big fan of the simplicity of subscription. But as much as I'm a fan of that, I'm a bigger fan of consumer choice and allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense.
Elon Musk, meanwhile, had his own spin on why Netflix is losing subscribers. In a reply to a tweet on Netflix stock plunge, Musk retorted that its woke nature is making Netflix unwatchable. A comment which has been retweeted more than 30,000 times and liked nearly 200,000 times. This more than a month after Musk had sharply targeted Netflix earlier on its so-called woke content. Bureau Report, Business Today Television.
Can renewables be an alternative to power demand? Sumant Sinha, founder and chairman of Renew Power, discusses the high commodity prices, rise in power and coal prices with our colleague Chetan Bhutani. Listen in.
In India is growing very robustly. And because of that, and because of some issues about sourcing more coal very rapidly, although of course the domestic industry is trying to keep pace, therefore there are shortages and therefore prices are going up. At the same time, there's also a lot of inflation in terms of commodity prices globally, and therefore even imported coal is becoming very expensive. Costs have actually, or prices of coal have actually more than doubled over the last few months' time. And therefore structurally you have more demand, and the way to service that higher demand is become more expensive, and so therefore prices are going up and will likely stay up for a while, especially with summer now approaching. Now, renewables can't play a role in the short term because it does take a year and a half to add new capacity. And we need to go faster. But for that, we need to debottleneck the supply of the equipment, the transmission connectivity, the land acquisition, all of those things. And if we do all of that holistically, then perhaps we'll be able to make a dent in this demand growth situation. But, there's a lot of work that needs to be done. First, let me say that we have some really, really very good partners. Both L&T and IOC are excellent companies, and we are really proud to be and delighted to be partnering with them. They bring a lot of very unique capabilities to the table. The first thing, to answer your question, that we will be working on really is a couple of pilot plants for the IOC Mathura and Panipat refineries, which we will hope to try to look at getting up and running fairly soon. And then we'll take it from there. I think we're all waiting for the government's green hydrogen policy on the demand side, where they are likely to put in place certain green hydrogen purchase requirements. And I think that will then really kickstart a lot of work on the demand side as well, which we can then hope to service from our JV.
And here's what else is making news in the corporate world. After days of falling share prices, HDFC today buoyant in trade after HDFC decided to sell 10% stake in its wholly owned subsidiary HDFC Capital to Abu Dhabi Investment Authority for 184 crore rupees. HDFC Capital manages an approximately $3 billion funding portfolio. In a move to boost infra for electric vehicles, Hero Electric has partnered with Bolt to set up 50,000 charging stations in the country in the next 1 year. Bolt chargers will be installed in more than 750 Hero Electric's touch points across India. The move is expected to benefit over 4.5 lakh customers. HDFC Bank has increased the interest rates on fixed deposits of less than 2 crore rupees on some tenures. The new fixed deposit rates are with effect from today itself. If you're parking your money in an FD for 1 or 2 years, you'll now get a 5.1% interest on those deposits. After reports of a cyber attack on PSU major Oil India, the company has clarified that malware threat was detected on April 10th and precautionary measures were taken. As per reports, the cyber attack disrupted Oil India's operations in Assam, and it even received a ransom demand of 57 crore rupees. And as we head into a break, we leave you with a look at KGF Chapter 2.
Yes, I call it genocide because it's become clearer and clearer that Putin is just trying to wipe out the idea of even being able to be a Ukrainian.
Since the invasion of Russia on Ukraine, more than 13,000 people have been killed. Several reports say many women have been raped. The Bucha massacre was an eye-opener to the devastation spread across Ukraine. Amid the deaths and casualties, world leaders proclaim that Putin is committing genocide. Genocide is when a mass murder is committed against a particular group of people. It's seen as the most serious crime against humanity. An example would be the killing of 6 million Jews during the World War. So can Russia's Putin be charged with genocide? American President Joe Biden has openly stated how Putin is a war criminal and cannot remain in power.
Oh, I think he is a war criminal. He's a butcher. For God's sake, this man cannot remain in power. Your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide half a world away.
Believe it or not, even war has rules to follow. The rules are in treaties of Geneva and in other international laws and agreements. Under war, civilians cannot be deliberately attacked. Many weapons are banned due to the suffering they cause. This includes chemical and biological weapons. Many investigations state that killings in Bucha were deliberate. Evidence states that civilians were shot dead with their hands and feet bound. Many Ukrainian women were raped by Russian soldiers. The UK confirmed that Ukraine has used.
Hello and welcome to Business Today. You're with us on Ask Udayan, the show where we answer all your questions on stocks. I'm Abha Bakaya. With me, our very own global business editor, Udayan Mukherjee. Well, with the markets responding to a whole host of triggers from the Russia-Ukraine crisis, Fed's taper view, now earnings, how smartly can you adopt a balanced portfolio approach and earn decent returns? Let's take some of those questions. If you've sent them in, it will be on this number on your screen, and we will take a few every week on TV and online. Let's begin with some of those viewer queries now. Our first question today is from BVM Sarma in Chennai, and this is on Thyrocare.
Good evening, Udayan. This is BVM Sarma from Chennai. You are one of my favorite analysts. I have purchased 3,500 shares of Thyrocare during the taking over by Farm-Easy, thinking that the Farm-Easy has come into picture and operating performance of the company will get improved. The project, the share is going down day by day. I really don't know what to do. Can you kindly advise?
Well, it's not just Thyrocare, but almost all diagnostic companies, even Dr. Dalal's Path Labs has had a terrible run in the market. I mean, they've corrected anywhere between 25 to 35%. I think part of this nervousness is because of the kind of aggression that we are seeing from many of the hospital chains and online players, online diagnostic players. So there is a general feeling among investors that margins for most diagnostic companies will be under severe strain over the next few months and years. And that's why they've started underperforming. But I think you're right in pointing out that the Farm-Easy acquisition of Thyrocare could be an interesting turning point. Because as you would know, that Thyrocare is essentially a low-cost diagnostic product and has been operating and fairly successfully in the B2B space. I mean, they provide diagnostic services to hospital chains and nursing homes. But now with Farm-Easy's acquisition, or the acquisition by Farm-Easy, they're trying to move from the B2B to the B2C space, where presumably margins would be quite a bit higher. So we'll see. It's a product in transition, and we'll see the next few quarters on how easily Farm-Easy is about to bring about that B2C transition for Thyrocare. It's a well-managed enough diagnostic service. So having seen such a big price erosion, I think it might be a little late to sell that company. You're probably better off trying to wait it out and see whether Farm-Easy can actually take Thyrocare higher over the next couple of years. So I would not panic at this stage after such a price erosion. Maybe patience is what you need to adopt with that company.
Jagannath Pawari of Bangalore has a question on Natco Pharma, so sticking with the healthcare space. Let's listen in.
Greetings for the day. Myself, Jagannath Pawari. I am basically a mechanical engineer. I am from Bangalore. My query is regarding I bought Natco Pharma share around 920 rupees. Currently, it is trading near to 820 to 830. My query is whether shall I hold Natco Pharma in the coming days or shall I sell it off? I request you to kindly suggest on this subject. Thank you for your support. Thank you for your valuable suggestion. Have a good day. Thank you very much.
Well, Natco Pharma has been stuck in a range this year of between 800 and 900, around the price that you've acquired those shares. And that's because the stock does not have any great near-term triggers. The important trigger was, of course, the launch of Revlimid in the US, which is a big drug, $8-9 billion drug. And a lot of Natco Pharma stock performance actually hinges on how Revlimid does in the US. What kind of price erosion will we see post the launch of the generic version by Natco? And what kind of market share Natco Pharma will get in the Revlimid space in the US. So I think a fair part of the share price of Natco is hinging on the Revlimid performance. And the market will now wait to see how over the next 3 to 6 months Revlimid performs in the US. And on that will be determined how the Natco Pharma share does, which is why you're seeing this consolidation in the 100 rupee price band. And I think in the near term, you'll probably have to see more consolidation in Natco Pharma. So don't expect this stock to be a rocket. It is cheap enough after the correction. At 800 odd rupees, I think it's trading at no more than 15 PE. And you won't find too many high quality pharma stocks in the market at 14, 15 PE. But the problem is that A, there is the Revlimid uncertainty on how it will do. And B, the existing portfolio of products, whether it's oncology or agrochemicals, they are facing some headwinds for Natco. But therefore, growth will not be very strong. If you strip it ex Revlimid, then the core business growth will probably be not very strong over the next 2 to 3 quarters. So my best guess is that the stock will continue to be in a range unless there are positive surprise from the US on the Revlimid front. Then it could be a massive trigger for the stock. So I think you will have to be patient. Don't expect any great returns in 2022 from Natco Pharma. That would be my best guess.
Okay, Nishit has a query. This is Nishit from Hyderabad on Sigachi and taking stock of whether or not she should remain invested in that stock.
Hello Udayan, this is Nishat from Hyderabad. I have 30 stocks of Sigachi stock at 340 rupees. Can I hold the stock for the next 3 months? Should I average or exit the position?
A 3-month call on Sigachi or any stock is very difficult and beyond my powers, surely. But the problem with Sigachi is that it listed too high. It listed at many times the IPO price, and therefore it needed a lot of time. It needs a lot of time to digest those initial gains. So it's no surprise that the stock is corrected from 600 odd to 300 odd levels. It is just purely a function of how much it had gone up post the listing. It's a good company. It makes, as you know, cellulose-based products which are in use in pharmaceuticals, in F&B, and all these kind of cosmetics, these kind of user industries. So the space is good. It has a very good list of clients locally and in the international market particularly. It's a fast-growing company. So I don't see any major problems with Sigachi. Part of the rub-off has been from pharmaceutical stocks in general, because pharma as a space has corrected in the market quite a bit, and maybe that has had some fallout attendant with very high valuations, starting valuations for Sigachi. But as I said, it's a good enough company, and once they get over some of the raw material pressures that they're witnessing right now, I think the stock might eventually begin performing. The good thing is that your entry price is not at the highs of 600, where a lot of people bought it and have got stuck in that company. You bought closer to 300. So I would say that it's a stock that you probably want to be patient in. This is not a recommendation to buy any more of that stock or anything like that. But I think it's a reasonably good company, and the recent price performance says more about how much it had gone up post IPO rather than anything to do with its recent performance.
Tanveer Mistry is written in from Mumbai on IHCL, and a couple of questions there post some of the recent announcements.
Hello, this is Tanveer Mistry from Mumbai. Any particular reason why Indian hotel stock is showing 6% increase? Is it a good time to sell or hold?
No, I think Indian hotels actually has reasons for going up because it turned, as you would have seen, the previous quarter was a profitable quarter after, I don't know, 5 or 6 quarters of being in losses. So I think it's a sign that it's coming out of the post-COVID slump because business has started picking up. The leisure business for Indian hotels is doing quite well already. You can see distinct signs of recovery in the leisure segment. Average room rates are picking up, occupancies are picking up across properties, and that has of course rubbed off to better margins in the recent quarter. But I think the business segment will also start to fire very soon, and you will see inbound travelers, which is very key for Indian hotels, also start to open up as COVID restrictions start to get eased by most international airports. I think a combination of business travel and inbound travel will see better results for Indian hotels and add to the fillip that they're seeing on the leisure segment already. So it probably is a good play in the near term on a recovery. Over a very long time, I'm not a big fan of hotel stocks because they don't exhibit great return on equity. Very few of them do. They're quite asset heavy. So return ratios being very poor, they usually don't create a lot of wealth in the long run. But in the short to medium term, I think there is a possibility that some of these hotel companies will do well. But if you get a very good bump up in the next year or two, maybe you would want to reevaluate your position, given that the long-term metrics usually aren't great in this sector.
All right, Udayan, thanks for taking the time out to answer all those queries. And if you have a query you'd like to send in, just simply message us on the number on your screen and we'll take a few of those every week with Udayan.
You are watching